Thinking of upgrading to a new home but not sure how to do it? Worried you can't buy your new home without selling your existing home? Or maybe you're worried you're going to end up owning two homes at the same time. There's a lot to be worried about when you're thinking about moving from your old home to a new home. If this is you, you'll want to watch this video. It's got everything you need to know before you make that big move. Hi, I'm Vinicius Brasil with the Brasil Group and Keller Williams. I'm a top agent here in Santa Clara County and have been helping home sellers for over 20 years. If you like this video, please give us a thumbs up and be sure to subscribe to my channel to be notified every time I post a new video. If you are a homeowner that's been living in your current home for a while and would like to move up to a nicer, larger, or more conveniently located home, you're probably wondering how you can pull this off. Whether if it's best to first buy and then sell or vice versa, you're likely concerned with the two main issues homeowners face when they're in this position. Number one, the cost and risks of owning two homes and having two mortgages simultaneously. Or number two, the possibility of not owning a home because of the difficulty of finding a new home in a challenging market. In this video, I will discuss the various ways to navigate this dilemma. I go over the different options available, as well as the risks and drawbacks associated with all the scenarios. You'll want to stay to the end as I discuss some new options that help to eliminate some of these concerns and can really simplify the move-up dilemma. As I mentioned earlier, there are typically two ways in which homeowners are able to make this change. They either buy their new home first and then sell their existing home, or sell their current home, rent that home back, or move into a rental or temporary home until they find a new home. As a homeowner, the thought of either of these situations is probably enough to make you forget the whole thing and continue to stay in your existing home. But there is another solution as well that removes some of the risk and inconveniences associated with these common strategies. First, let's understand the first two strategies, then I'll explain how the other solutions differ and why it could be the right solution for you. Buying before you sell. Buying a new home before you sell your old one is the trickier of the two methods. While it's not impossible, it does require more financial finagling. However, in some cases, what prompts you to even consider moving is that you find your dream home early on in your search. If this is what happens to you, here are your options. You can use a home sale contingency. The easiest way to deal with this scenario is by including a home sale contingency in any offer that you make. This contingency is part of the offer to buy your new home, which allows you a set period of time to find a buyer for your old home before you close escrow on your new home. If you can't find a buyer in time, you may have the option to try to extend the contingency or to back out of the deal. If this option sounds too good to be true, it's because for the most part it is. Home sale contingencies are not widely accepted by sellers or listing agents. Sellers don't like them because they offer little to no reassurance that the buyer will actually be able to purchase the home. Also, because of the fast-paced nature of the Bay Area real estate markets, the feasibility of this strategy is limited to slow markets or overpriced, less desirable homes that are just sitting on the market. You're free to include this contingency in any offers that you make, but be aware that it negatively impacts the strength of your offer. In many cases, the seller may expect a higher price from a contingent sale offer. Sellers are also more likely to accept this type of offer if their home has been sitting on the market for a long duration, or they like the price you're offering and are not in a hurry. Most importantly, for this strategy to work, the sellers must be confident that you'll be able to pull off the sale of your home. Therefore, the way it is presented to their agent must be done in such a way that it conveys the confidence that your home will sell. The pros of this strategy is that there is very little risk to the buyer. If you're not able to sell your home and the purchase deal falls through, you may be out some fees for inspection and an appraisal and lost time and energy, but that's about it. The cons are that it's rare that you'll be able to convince the seller to accept your offer, and therefore you might lose your dream home to a better offer. Number 2, get a bridge loan or home equity line. A bridge loan is another option to help you deal with the financial strain of buying a new house before you sell your old one. Bridge loans are short-term loans that allow you to pay off the mortgage on your own home so you don't have to carry that cost. Then, when your home sells, you'd use the proceeds from the sale to pay off the bridge loans. In order for this option to work, you have to have a considerable amount of equity in your existing home and meet the lender's requirements to be able to purchase the new home. That being said, bridge loans are a gamble. These loans often come with strict terms and high interest rates. In order for a bridge loan to work, both transactions need to be completed. If there's a problem with the sale of your existing home, you'll still be responsible for finding the funds to pay off the bridge loan on time. A home equity line of credit assumes that you have enough equity in your existing home to be able to qualify for your new property. The downside with this strategy is it takes time to set up and open a home equity line of credit, and you may not have that much time to make an offer on that dream home. In order for this strategy to work, you have to prepare in advance and have the home equity line of credit approved. Also, lenders will not approve a home equity line of credit on your home if you're in the process of selling it. So you'll need to open up that home equity line of credit before your home goes on the market. Assuming your home equity line is approved, then you'll be able to make an offer on your new home without a contingency to sell your existing home. And once your offer is accepted, you can draw the funds from the HELOC to purchase your new home. At this point, you can list your existing home to be sold. There are a lot of what ifs in these two scenarios, such as having enough equity in your home and being able to qualify for a new home. Here are the pros and cons of these strategies. Pros: being in a position to make a clean offer without a sale contingency clause, therefore vastly improving the quality and strength of your offer. Cons: the risk associated with these scenarios are the typical risks that you'll assume when you buy before you sell. If your existing home doesn't sell or has a hard time selling, then financially you may place yourself in a difficult situation. Had you counted on your home selling at a certain price, and if it falls short of that price, you may need to dip into other accounts, take out a higher loan, or sell other assets to make up the shortfall. The key here to limiting your risk is working with an agent who understands your home and your home's market and can give you an accurate assessment of the value, sales costs, and additional costs that you might incur, such as capital gains. In either case, your first steps are to always speak with a realtor who's knowledgeable. They can help you understand the market and your true home's value. Ultimately, a local real estate expert should be consulted to help you to determine the best plan to achieve your objective. Selling before you buy. This option allows you to submit offers on new homes without having to worry about using a home sale contingency or taking out a new loan. Selling your old home before you buy a new one can be a more financially secure option. This way, you'll know exactly how much money you have to spend on your new property. However, this method is not without its inconveniences and risks. As an example, you may have to deal with the stress of moving twice within a short period of time. Here are the different strategies you can use to buy a new home after you've sold your existing home. Number 1, renting back your previous home. A rent back is exactly what it sounds like. You rent your home back from the buyer who is now the new owner. In our market, it's not uncommon for a seller to request a rent back, and buyers generally accommodate. A 30-day rent back for a seller from the close of escrow date can be typical of any transaction. Once the home closes escrow, the seller can stay up to 30 days. These rent back scenarios need to be negotiated up front when you accept the buyer's offer. It's very common for the buyer to throw in a free rent back with their offer and request a security deposit to be held in escrow. Although convenient, 30 days is hardly enough time for the seller of the home to find a new home, close escrow, and then move into that home. The challenge here is that most rent backs cannot extend beyond 60 days. There's a provision for the buyer's loan that they need to move into that home within 60 days in order for that home to be considered a primary residence. Also, buyers generally want to move into their new home, so anything beyond a 30-day rent back may not work for all buyers. If you're able to negotiate a 60-day rent back, it does give you some time to find a new home and close, but depending on the market, that still may be not enough time, especially if your new home requires updating before you move in. Here are the pros. Financially, this is a more secure option since you know what your existing home sold for. Also, you have the ability to make a clean, non-contingent offer while you're shopping for your new home. If found quickly, you can complete just one move directly to your new home from your old home. The cons. It may not be enough time to find a new home, close escrow, and move into your new home. Depending on the market, prices could be climbing fast, making your new home more expensive than you had planned. This leads us to our second scenario of finding a short-term rental. Moving into a short-term rental means moving twice, but provides you the time to find the right home. One of the challenges that sellers face in this scenario is finding the right rental. People who have pets may find it hard to find a rental that works for their family. Another issue is short-term rentals in our market are not very common. You may find yourself having to sign a year lease that you may have to break. With any option where you sell first before buying, this can become risky in a heated real estate market where prices are appreciating rapidly. After you sell, you may find yourself in a position of having to buy a home immediately and compromising on the very aspects that motivated you to move in the first place. Pros. Pros of a short-term rental? Well, you'll have more time to find the right home and the ability to make a cleaner and more competitive offer that sellers will consider. Cons. Moving 2 times instead of once could be challenging to find the right rental that works for you and your family. And there's also the risk of the market appreciating while you're home shopping and pricing you out of the home you were hoping to be able to afford. As you can see, neither of these options is ideal, and each carries a significant amount of risk. This is why many people just stay in their existing homes or try to remodel. Now, there are other solutions out there that offer more convenience and are less risky. These solutions allow you to buy your new home without taking out a line of credit or a bridge loan and offer you the convenience of shopping for your new home while you're still living in your existing home. Let me explain how these options work so you can understand the pros and the cons. Option number 1 is the direct cash offer. This is the simplest solution that will allow you to sell your home right before you purchase your new home, releasing the proceeds from your home to be used as a down payment on your new home. The sale of your existing home would be timed after your offer to buy a new home has been accepted. Also, this option clears any loan you had from your previous loan, enabling you to maximize your purchasing power. This option will also provide you with the option to remain in the home you just sold for up to 30 days after the close of escrow, so you can move directly into your new home. This is how this option works. Prior to buying your new home, we'll have to have your existing home appraised and estimate its current market value. We'll need to have an inspection done on the home to make sure there are no major defects and to assess the condition and costs involved in repairing the home. Once the property's market value has been assessed, you'll be eligible for a direct cash offer. Keep in mind that a direct cash offer will be around 10 to 50% less than the market value. One of the advantages of a direct cash offer is you will not need to pay any commissions, but will be responsible for the title and escrow fees when you close, which can be about 0.5%. The pros of this option are it's simple and it has very little risk. You can close escrow in as quickly as 8 days or less. You'll also be able to remain in your home, which you have just sold, for 30 days after closing to allow you to move into your new home. Also, you'll have the freedom to use any lender for your new purchase. You'll save costs without having to pay commissions, and don't need to go through the costs and process of repairing and updating and staging your new home to sell it. Lastly, you'll avoid the traditional sales process, which can involve weeks of showings, open houses, and potentially risky escrows. The downside is you sell your home without it going on the market and could potentially be receiving a lower offer than what you could have received if you had listed your home. Option 2, trade in with sale price guarantee. Similar to the option above, but instead of selling before you purchase your new home, you use a special lender that will finance your purchase as if you sold. The lender will approve you based on your equity and use an estimated appraised value of your existing home. This is the price that you are guaranteed to receive for your home. You'll still need to pay agent commissions and closing costs. This option will allow you to make an offer on the new home without any contingencies and can close as early as 8 days. Once you have closed on your new home, you'll need to have your existing home listed on the market within 10 days. The benefit of this program is that you receive the entire proceeds based on what your home sells for. This program stipulates that you must sell within 90 days. If you do not sell within 90 days, you'll receive the guaranteed price minus any costs, such as fees, closing costs, home prep fees, inspections, and realtor commissions. Pros, again, you'll be able to make a non-contingent offer on your new home and remain in your existing home, so you'll only have to move once. You'll have a guaranteed price for your home and the opportunity to sell your home at market value. Cons, in order to take advantage of this program, you're required to use the program's lenders. Your loan qualification will be based on the guaranteed offer price and may limit your purchasing power toward your new home. You'll be paying 2 mortgages while you continue to own your original home. The fee to use this program is about 1.2% of your home's value. Conclusion. The process of moving to a new home and selling your existing home has never been easy. The traditional ways of buying and selling a home burden the homeowner with varying degrees of risk and inconvenience. There are some newer solutions that attempt to solve these inherent issues and make it easier for the homeowner to move. The key to any homeowner faced with this challenge of moving and selling a home is to talk to a professional realtor in their local market. An agent who has in-depth knowledge of your market and the experience and knowledge of these different options and programs available will be able to help you explore the solution that would best suit your needs, limiting your risk and inconvenience and setting you up for success. Thanks again for watching, and please let me know what your thoughts of this video are or any questions in the comments below. If you yourself have been thinking of making a move and perhaps have specific needs or questions about your unique situation, I'd love to hear from you directly. You can book a call directly with me. It's free, there's no obligation, and I look forward to helping you in any way that I can. Until next time, this is Vinicius Brasil with the Brasil Group and Keller Williams.